Hi. When constructing a portfolio, it's always important to think about how much risk are you actually taking with a certain position, right? So for example, when you've got some stocks, when you've got some Bitcoin, how much more volatile is, say, your crypto position versus your stock position? And this question is especially important since now the Nasdaq is very highly correlated with Bitcoin. So you might want to check out the last video on this channel. The correlation between Bitcoin and the Nasdaq is going up. So the two assets, they tend to move more in tandem to one another. You don't get that much diversification benefit anymore from holding both. But it's still interesting to know, say when you shift some of your Nasdaq ETFs into Bitcoin, say you think Bitcoin is comparatively cheap right now, how much more risk are you potentially taking? How much more volatility are you potentially taking? And in order to answer this question, we have to do some kind of number crunching here. In this video, we're gonna derive two financial terms. We will determine the alpha of Bitcoin versus the Nasdaq, and we will also determine the beta of those two assets to one another. So bear with me, this is a bit more of a complex topic, but I think after this video, you probably have learned something. And in case you do decide to shift some of your money over, you will have a rough idea of how much of that money actually is worth shifting, given you want to keep the same kind of risk within your overall portfolio. So let's look at the data first. I've exported the weekly prices of Bitcoin and of the Nasdaq 100 to be more specific. And the reason why I took the weekly returns is because those markets, they don't open and close at the same time, right? So matching this up or looking at potentially intraday data, it's a bit of a hassle. It might also give some kind of a distorted view. And in the end, we are just allocating capital over here, right? We are not actively trading. We want to see what are the long-term effects here. So we've got weekly data starting on the 14th of August 2017, and we go all the way to the last finished week on the 24th of January of this year. So first of all, we determine the weekly returns, right? This here are the returns for Bitcoin. This here are the returns for the Nasdaq. And now let's talk about what alpha and beta means. So let's first go with this conceptually. So in the financial literature, beta, let's start with that, means the following. You've got one asset and that might go up and down and up and down with a certain magnitude, right? And then you've got another asset, and that asset might be more volatile, right? It might be highly correlated, as for example, Bitcoin and the Nasdaq nowadays are. And say red is now the Nasdaq, Bitcoin is likely going to move more, right? So when it goes up, it tends to go up more. When it goes down, it tends to go down more. And so you've got in both directions a magnification of the movements. And so potentially when times are bearish, when times are bad, you're going to lose much more money. But the same is true the other way around. When times are bullish, you're going to gain much more, right? And what we are looking at here are relative moves, right? So percentage moves. And so those crashes that we see in Bitcoin, where we go from top to bottom, more than 80%, what happened in the crypto winter of 2018, those kind of crashes are less common in the Nasdaq. Of course, we also crashed in the Nasdaq quite a bit during the dot-com bubble. But looking at the same time frames, Bitcoin tends to move more. This should not be a surprise. And so one could argue that Bitcoin, since they are so highly correlated, it's almost something like a Nasdaq on steroids, a leveraged Nasdaq. So say when the Nasdaq goes up by 1 unit, let's say 10%, so let's write this over here. This was a short-term rally of 10%. Then maybe Bitcoin goes up by 20%. Okay, so you've got a leverage of 2 over here. And the same is true the other way around. The Nasdaq goes down maybe 5%, and then Bitcoin might go down 10%, right? So we 2x our movements in both directions. That's called beta. So you want to know how much more risk are we potentially taking by shifting our money from the Nasdaq to Bitcoin. Because let's say the leverage or the beta is 2, and you don't want to actually take on more risk, but you think maybe relatively speaking, Bitcoin might still be comparatively cheap. If the beta would be 2, that will in turn imply that maybe you only shift half of your Nasdaq money to Bitcoin, and with the other half, maybe you just put it in something super safe. So maybe stablecoin yield farming, DeFi, or maybe even more conservative than that. So these are the kinds of considerations, these are the kinds of thoughts that do make sense here. And so this is the beta. Let's now talk about alpha. Alpha is the following. Let's assume our beta is exactly 1 for Bitcoin and the Nasdaq. It's not true, but let's go with this assumption in order to simply explain the concept of alpha. So if the beta of the Nasdaq and of Bitcoin would be 1, that would mean they always go up and down in the exact same magnitude, right? And they are highly correlated. They tend to move in the same direction at the same time. This means beta is 1. So when the assets, they go sideways, none of them outperforms. Now everybody wants to generate alpha. And what does it actually mean? It means even though we've got the same kind of risk, the same kind of volatility, one of the assets might outperform. So let's just say this is Ethereum. And let's say the Ethereum volatility is also pretty much the same. So the beta is 1. It goes up and down with the same kinds of magnitude. But we do see an outperformance over here. So we don't take on more risk, but we do get more performance. This difference over here, this is called alpha. So an outsized performance without getting into more price risk. And so there's a relatively straightforward way to find that out. What's the alpha and what's the beta of Bitcoin versus the Nasdaq? And so let's dive into this. But before we go into the juice of this video, if you so far like this content, if you enjoy this style of video, please give this a like because it will help the channel grow. Thank you. So here we go. We've got our weekly returns of Bitcoin and of the Nasdaq for each single week. And what we now do is we will put these weekly returns on a scatter plot. So on the x-axis, we've got our weekly returns in Bitcoin, and on the y-axis, we've got the weekly returns in the Nasdaq. So this point here, for example, means that Bitcoin in a certain week in that data set made 38% return, while the Nasdaq made almost no return, right? 0.1. That's this specific point over here, and we can see the correlation is not perfect, right? Otherwise, we would just have a straight line over here. We do have some kind just of a cloud. It's not perfect correlation, but still, when we get the regression chart through those points, we do see a positive slope. And this regression line here, this dotted line over here, is really all we need in order to determine alpha and beta. Because let's zoom in on this chart. Let's look at where this dotted line crosses the y-axis over here. When we do that, we come to this chart over here. So of course, we don't see all the data points anymore. We have simply just zoomed in. But what we are now seeing is that given Bitcoin is doing 0 return, we see the Nasdaq returning something positive. Now that's very, very interesting, right? This means if we adjust for all the random fluctuations, the Nasdaq actually has a positive alpha versus Bitcoin. Or in other words, if the Nasdaq and Bitcoin would be perfectly correlated over this time period, and you would simply lever up the Nasdaq, you would have gotten more return than if you just held Bitcoin over this period of time. So the outsized returns of Bitcoin versus the Nasdaq since Q4 2017, it solely comes from taking on more risk. Now that's a very surprising result over here, right? We are looking at this time period over here. So since the middle of August 2017. So that's this point over here. And during this time, the Nasdaq went up by 150%, so a 2.5x. Bitcoin, however, went up way more, right? It went up 780%. So one might argue, okay, Bitcoin is the better investment, but Bitcoin also had much, much more volatility, right? It went down by more than 80% temporarily. So within this data set, we do have the crypto winter. It is kind of arbitrary what kind of time window you take over here. But still, I find this pretty fascinating, right? The maximum drawdown for the Nasdaq, they were, of course, way less pronounced. And so if you just levered up the Nasdaq, instead of buying Bitcoin, you might have, in the end, gained more potentially. Now, by how much would we have to lever this up? Not saying that this is a good strategy, but still we want to find out the beta, right? What we now just looked at, this crossover here, this, say, 0.38% maybe weekly return, that's the alpha. But let's look at the beta. How much more risky was Bitcoin during that time? And so what we want to look at is the slope of this line, right? How much does Bitcoin tend to move in one direction versus the Nasdaq in aggregate when looking at weekly returns? And when we just take this roughly, we can say maybe Bitcoin moves 35% when the Nasdaq moves less than 2%, right? We've got a little bit of alpha over here. So let's say we've got 35 divided by not 2, but 2 minus those 0.38. So that's 1.62. So that gives us a leverage of 21, right? So that's how much more risky Bitcoin was on average versus the Nasdaq during this entire time period. And that's why the Nasdaq in this model looks like the better bet. So in other words, the Nasdaq barely moves and Bitcoin is making crazy appreciations and crazy depreciations, a lot of potential risk. Now, the issue with this is we are looking at a very large data set, and we do have the crypto winter in here. And the main reason why those numbers, they don't really seem to relate to experience, right? We rarely see nowadays Bitcoin going up by 20%, while the Nasdaq is only moving by 2%. It's simply because we took in so much data, and the correlation between Bitcoin and the Nasdaq has only increased recently. So we can see this scatter plot over here, right? It's all over the place. And that's because in the early days, the returns were not correlated that well. So this analysis, the strength of this analysis is also comparatively weak. It works way better when we've got high correlation. And so let's look at the last year only, because that's probably a way better gauge to compare the real inherent leverage of Bitcoin versus the Nasdaq. And so this is just the data set over the last 52 weeks. Again, we've got Bitcoin on the x-axis and the Nasdaq on the y-axis. Let's first start with alpha. So let's go here to the right. We can see again the weekly alpha of the Nasdaq versus Bitcoin is positive because Bitcoin was going sideways pretty much in the last year, right? So now the alpha is only 0.1% for the entire data set. That's way higher. By the way, if you want to put this into annualized numbers, this is how you do it. So risk adjusted, this is what alpha the Nasdaq has versus Bitcoin. We're looking at 0.1%, and then we simply compound this by 52 weeks. So that's a yearly alpha of 5.3%. Not massive, but still existing, right? It's interesting how both over this long period of time and the shorter time frame, the Nasdaq 100 was actually outperforming risk adjusted. Now, how much more risk do we have? Again, let's look at the last 52 weeks and let's look at the inherent leverage over here. Let's look again at the slope of this regression line. We've got 20% movement for Bitcoin, while the Nasdaq is moving less than 2%. We've got a bit of an alpha over here, so let's say 1.9%. So that's 20 divided by 1.9, which is a beta of 10.5. So less of a beta, which also makes a lot of sense, right? The volatility of Bitcoin is declining over time. It's now way less volatile than it used to be, but still 10.5 is the beta. I think that's very, very impressive. If the Nasdaq goes up by 1%, Bitcoin is expected to go up by 10.5%. A bit less than that because the Nasdaq does have an alpha. But still, I find this leverage over here very, very interesting. This basically means if you've got $1,000 in the Nasdaq and you want to shift this over to Bitcoin and you want to keep your risk, all you have to shift over is maybe 1/10 of that money. So maybe just $100 into Bitcoin, the other $900 into something super stable, and you will get the same kind of price fluctuations within your portfolio. Now, making that shift from the Nasdaq to Bitcoin only makes sense if you think that the Nasdaq will not have a positive alpha anymore, right? Because alternatively, you could simply lever up your Nasdaq ETFs. You have to include financing costs in such an endeavor as well, though. But just looking at risk-adjusted returns, you would need to have the expectation that Bitcoin will be the better bet. If you do have that conviction, then you don't have to necessarily put in a lot of money, simply because the beta is so high. Now, I found the results of this analysis very, very interesting. First of all, I never thought that Bitcoin is that much more risky compared to the Nasdaq. I never thought we would get such a large leverage, right? A 10 to 20x versus the Nasdaq. And the Nasdaq is not one of the conservative indices, right? It's technology in the end. It's already way more volatile than, say, consumer stocks or something like this. But still, if you compare this, and still, if you just look at the last year, we've got a 10x leverage of Bitcoin versus the Nasdaq looking at weekly returns. And when we work with such an assumption that Bitcoin is that much more levered, then a lot of the outperformance we see in Bitcoin is simply a consequence of this additional risk. It's not a consequence of outsized performance when we adjust for that risk. The alpha is negative for Bitcoin, at least when we look at those two time frames and when we don't include any kind of market timing in this, right? The second very surprising result that I never thought would be true is we saw Bitcoin rallying so much, but still looking at weekly returns, we didn't get an alpha. It was simply just more volatile, and the volatility was in our favor in those past time windows. This doesn't have to be the case in the future, right? This is all just retrospective. This is not looking into what might happen in the future. But still, I would have expected to get some kind of an alpha for Bitcoin in that analysis. But that's not the case. Now, what does this mean in practice? Well, it very much depends, right? If we will get an alpha for Bitcoin versus the traditional stock market in the future, it depends on your outlook. Do you think that Bitcoin might get even a more impressive rally in the future and that this might happen even though the Nasdaq is kind of stagnant? If your answer is yes, then a result from that will be an alpha for Bitcoin. But if you think we will just simply continue on the current trajectory, maybe it also makes sense to not forget the traditional markets, right? The traditional stocks. One thing that I also think is interesting, right? This is the entire data set, Q4 of 2017 to today, the weekly returns. We see a pretty white cloud over here, pretty far away from this regression line. When we just look at the last year, these points, they are much closer to the regression line, right? It might not necessarily look like this because here we are comparatively zoomed in. We are looking at plus 6% to minus 10%. Here we are looking at a broader range over here, but simply look at this, right? These points, they do tend to be shaped in this upward trending cloud, right? There are points around this regression line. Here we can't really say this looks like a line. So the correlation of Bitcoin to the Nasdaq, it is increasing. And there's a separate video on this. Simply look at the last video on this channel titled Portfolios Don't Work. Check out that video if you want to learn about how the correlation developed over time. Now, besides just liking the video, which would be very much appreciated, you might also consider to look at the premium membership because the current rate, it will increase with the 1st of February. If you lock in the current rate, you will not be affected by that increase. So you sign up in January, you keep the $49 per month to infinity until you unsubscribe. So feel free to check that out, the premium membership at thebitcoinstrategy.com. We've got exclusive content around portfolio analysis, around data analysis. We've also got an exclusive chat where you can ask me any questions and daily market updates around crypto. So where might Bitcoin, where might Ethereum go based on statistical analysis? Of course, if you haven't yet, feel free to subscribe as well. I publish videos regularly. Last but not least, there's also a public Telegram channel to be found at Bitcoin Strategy Channel. Simply search for that within the Telegram app. See you next time. Bye-bye.